Okay, investors, so today we're going to be discussing a lot of cheap, high growth stocks. And the first one we have here today for y'all is IVR, Invesco Mortgage Capital. And if you take here, look at the graph of last 5 years, um, it has a steady price of $16, and it's pretty good. It wasn't until the corona March 6th around there where it started finally dropping from a value of $16 all the way to almost $2, which is unbelievable. um what's it called? If you look down here, this this company alone has a very extremely high dividend yield of 32.86. So for those who were holding it around 16 dollars previous corona, that was definitely bravo to you. You're definitely getting a pretty good amount of dividends. So as soon as you see this recover back to its original value of $15, you should definitely see some high growth. Not only that, dividends. Um, you should definitely see some sweet dividends coming in every quarterly. Um, and correct me if I'm wrong, it's either quarterly for this company, if not monthly. It varies from company to company, but it's a very good investment. I got a few shares right now. I'm actually thinking of buying more. I just want to see where it goes a few days from now, but definitely worth something to look out for. Second on our list is going to be IVC, and this is Invacare, which is basically our health sector. And if you take a look here at the 5 year graph, it's a little bit shifty between rocking down from $19 to 13 to 10 to back to 17, $18. So I mean, as you can see right here, it's doing another little crazy little drop, and it was about to start recovering, but it wasn't like for that corona that ended up causing the stock to remain at its price right now. But within a year or two, since it's in the health sector, medical as well, you should definitely see this company going back up to maybe like $18, $20, or maybe $15 at most. So you should definitely see some profits on this one. The company was founded in 1979, so it's been around for quite some time. Not only that, it has almost 4,000 employees, so it's pretty decent. The dividend yield is 0.65. It's not too bad, um, but it's manageable for the 721. Where something to look out for. Third on our list is going to be M- Mafa Financial, and this is a REIT. Um, which is a very good price for $2.79, considering the stock was at $7 right before it actually ended up dropping. Um, so if you definitely go and invest in right now, you'll most likely see a triple gain, triple profit gain, or possibly even just double within the next year or so, I believe. Definitely worth something to look out for. Thinking of buying a few shares of these. Um, if you look right here at the 1 week graph, it's been going up slowly, almost for about $1. So definitely worth something to look into right now before it's too late. 83% hold. As you can see, a lot of people are have bought a lot of shares and are holding. And like I said, definitely worth something to look out for. 26.06 dividend yield. So once it goes back to $7, you should be seeing like possibly uh, 30 cents minimum maybe per share, or stock. Worth something to look out for. Good price, $2.79. Invest now before it's too late. Fourth on our list is going to be Exam, and keep in mind that my list is not in order. It's just all the all, all stocks you should look out for. um, ExxonMobil, currently it's at $50, and looking here at the 5 year graph, it's been around 80 to $70. It's pretty good, considering they have a really good dividend. And not only that, this ExxonMobil is one of the best natural gas or oil companies to invest in. Considering most of them are going in a trend down, this has been actually pretty steady. Uh, I got in around $40. I regret not buying more, considering the stock has gone up a little bit of $10 now. Um, You look here, actually, my dividend of 87 cents, and that was when I got in around almost $40. So definitely pretty good dividends, almost a dollar return per stock. Were something to look out for, considering they have a 6.50% dividend yield. It was founded in 1882. It's been around for almost 200 years, which is pretty crazy. And the headquarters is here in Texas. Employees, almost 75,000 employees. It has a market capital of 217 billion, which is pretty good. Um, there's definitely better companies out there, but ExxonMobil is one of the best ones out there for sure. Next up on my list is going to be Defen, I believe. Direction Daily Aerospace and Defense Bull ETF. And what this is basically like a bunch of airline companies into one stock, essentially. So if you definitely, since you're definitely seeing all the airplane stocks or the airline stocks go up, you should definitely see this ETF as well go up in value. I got in about $10, which it's definitely a really good price. So I got in about April or so, but I definitely do regret not buying more, considering it's already doubled in value. So imagine putting $2,000, $4,000 right there, $1,000, $2,000. Um, I what's it called? I do regret not buying more shares, but definitely still something to look out for, considering it's at $20 and previous price was around 50, 60, and it was consecutively going up slowly but surely. Definitely see about You'll definitely see about 100% or 200% growth in returns in this stock. And if you look down here, their dividend yield is 1.43, which is pretty dang good. I still yet to receive the dividend from them, so I can't exactly tell you how much it'll be, but definitely it'll probably be around 20 to 30 cents. As the time goes on, the dividend will as well get bigger, but definitely worth something to look out for. And now, for our fifth stock to look out for will be Ford Motor, and the reason behind that is because Ford Motor has been going down in the previous years, and it wasn't until recently where it finally started to pick up slowly. And I definitely see this company going up a little bit in the near future. Reasoning is Ford has announced uh, excuse me electric vehicles in the near future for like 2023, I believe, or so. um, the future is electric vehicles, guys. Everybody's moving from oil to electric. That's the reason why all oil stocks as well have been going down in a trend for the past couple years. um, Ford is finally moving from oil and gas to electric. It's definitely a huge move. You see Tesla and Nikola through the roof. So definitely all other companies that are as well moving into electric vehicles should definitely spike up, or their price value in stock should rise up a little bit. But I mean, Ford has been around for the longest time. It's been around for about 100 years now. Not founded in 1903, which is the longest vehicle transportation company that's been around. It has a very high dividend of 8.29. So, I mean, like I said, it's time to invest in now before it goes up any higher. In my opinion, I'm thinking of maybe looking into Ford soon. Definitely watching out for it, seeing where it goes in the near future. If you see this company going up in value within a month or two, definitely buy a few shares. Just you wouldn't want to miss out on an opportunity like that. And then on my next list, it is Norwegian Cruise Lines, and currently it's at a value price of $20, which is not too bad, but its pre-price was around $55 or yes, or 40, which is pretty dang good. As of right now, it's 20. So if you do invest in right now, you should definitely see double your profits in the near future. I actually got in a while back when it was 11.38, and I definitely do regret not buying more. There's a lot of things that I do regret not buying more, but I mean, you live, you learn, and then you you correct if you learn and you do better. Um, but definitely we're something to look out for. Norwegian Cruise Lines, $20.66. And before it's too late, um, you've already seen a couple returns in this. Right as of right now, $140 in return. It's not too shabby, but um, the more you invest in it, the more you will see in return, obviously. But next up on our list will be UAL, and UAL is an airline stock which has extremely potential for growth as well. Um, Here in June, currently as of June 10th, the price is at $40. Pre-corona was sitting around at a high of $80 to $90, and as the year has been going on, at least United Airlines, it has been slowly but surely growing. Not only that, um, uh, as of right now, I thought they had dividends, but they don't. As of right now, it's $42, but I mean, within a year or two, you should definitely see it going back up to where it was at least before, possibly hitting new highs depending on the economy. Um, I know inflation and everything, all the money they pumped up into the market should maybe change the price or the value in the market, or as well all the new investors that have joined. Um, Potentially pumping up the market or making new highs. I mean, you've already seen like Tesla, Apple. I mean, they're already at their new highs almost, as well as Snap actually, which we're gonna be discussing in a little bit. Um, but just keep in mind all the airline stocks, all the cruise stocks. Um, what else? What else? I mean, companies like that are gonna shoot up right now, and then you're gonna see the most growth in those. But next up on our list will be Disney, and the reason why Disney is gonna be on our list is because since if you look here at the 5-year graph, it found a steady price around $110, but it wasn't until 2019 where Disney started to kick off once again, and the reasoning behind that is because of Disney Plus. Now, Disney Plus was causing the Disney stock to grow, but it wasn't until Corona where caused the Disney stock to flunk a little bit and then drop all the way down to $85. But the reason why I say it has the potential to grow is because if you look at this Disney, it has Disney Plus, and Netflix currently is around $400, and Disney Plus is just another streaming service just like Netflix, Hulu, Crunchyroll, um, etc. So if Netflix has the potential to go up to $400, $500, just imagine Disney. I mean, this stock alone could go up to possibly $200, and it was founded in 1923, so it's been around for almost 100 years. Not only that, their dividend yields are great, amazing. You'll definitely be seeing around $10 in return every 3 months. Um, it's just a great stock to invest in, as well as it's safe. You don't have to worry about it. I mean, it's been around for 100 years, right? Who's to say Disney isn't going to be here for the next 50 as well? Next up on our list is going to be Delta Airlines, and Delta Airlines, if you look here at the 5-year graph, it's at a steady price of $50 or so, and right now it's at $31. So if you do invest in, you'll potentially see almost double of what you invested in previously. But it's still a good price to invest in. It's not too late, and you should definitely see some returns in that. Like I said, all airline stocks and cruise stocks are worth to invest in. Not only that, Delta Airlines actually gives out dividends almost 5%, which is pretty dang nice. So if you do plan on holding Delta for the near future, it's worth something to look out for. I do see maybe Delta hitting new highs if it's able to pass its $50 or $40 mark, but time will tell. what is something to look out for as well as Snap. Snap is going to be our final stock on the list, and the reason why I'm going to be discussing Snap is because if you look here, when it first launched, or for the first time you were able to invest in Snap, it was until around 2017, and it launched out on about a price of $20, and after that it just kind of went downhill. I was never able to recover past $20 again, and it wasn't until Corona where Snap actually dropped all the way to $10, which is another perfect opportunity for new investors to come in. And at the time I was thinking of getting Snap, but I decided to back out on it because I was like, nah, I don't see Snap coming, or I don't think Snap is a great company to invest in. But now that I look back, I kind of regret it, because if Snap is able to pass the $20 mark, then Snap has the potential to go up to a $40 or $50 mark. And I know that seems crazy, but the new generation of the youth that's coming up, all the teenagers, all the young new generation is using Snap. Not only that, TikTok, all these camera filters or framed apps. Snap is guaranteed to possibly blow up in the near future. It all depends on how they do in the next upcoming months. Not only that, it's because they're also paired up with Facebook, and Facebook is actually at a stock price of $239. Back in 2015, Facebook was worth at $80. 5 years later, this company has grown over 2 or 3 times its initial price. So it's pretty absurd, and it was founded in 2004. So who's to say Snapchat doesn't have the potential to go up to $50 or $60 around there? It's a great company. I mean, if you look at Twitter, I mean, Twitter's around $30. So Snap being at 20, I definitely see it going up in value at least $10 to $20 more. But that'll be all for today, guys. Remember, we have IVR, IVC, MFA, XOM, DFEN. We got Ford. We got Norwegian Cruise Lines. We got United Airlines. We got Disney. We got Delta Airlines. And we got Facebook. And so that'll be all for today, guys. And sorry if y'all hear any background noise or any construction. We're currently installing a few things in the house. So I'm very terribly sorry if y'all are able to hear that. But thank you very much. Make sure to like, subscribe, and leave a comment down below.